What's up, traders? My name is Heath and this is Trade Talk. So this is going to be a quick video discussing a few trades that I took this week. Last week I was red on the week, so I didn't have any trade recaps to do for you, but we're going to slowly go over quickly go over this right now. So basically here is the Aussie Swiss. I have been watching this trade since the quarter open. We were trading around this area here. This is a monthly resistance level, all right? You can clearly see multiple daily attempts to get above that monthly level and just could not do it. Also, while doing that, you created a new daily resistance level in this bullish candle right here. All right, and then you started to roll over. So trading view changed there. When you take a position now, it is a different color and your stop loss is for whatever orange, but the stop loss limit was set at 0.71777, and the actual entry was on a retest of this level and then a slowly start to fade away. So I decided to get short and throw my stop loss above those wicks, treating this as a swing trade, assuming that this thing was going to roll over. Now, I did take some of the profits off of this thing once we got down to this bearish candle's close. So essentially I have just 1/3 of the position size left on this trade. So if for whatever reason it decides to come all the way back up and stop me out, I'm okay with that, as this was a phenomenal trade. As you can see, with just my risk to reward, basically, if that being 1, you can clearly see that this thing is close to like 7 or 8 risk units to 1. So that trade was phenomenal. Wiped out every single loss that I took last week. Last week was a brutal week for me, traders. I took 3 trades and I got smoked on all 3 trades. So this trade obviously has smited down all of those red days, and it's phenomenal. And this is why risk to reward is so crucial, and it is the most important thing as a new trader that you must learn. All right, and then so basically we're gonna let this thing ride and see what happens. Now today I took a day trade on pound dollar. All right, so basically we were trading down in here. Let's go look at the 8 hours so I can frame this trade out for you. This candle, it's saying that it closed yesterday, but this is the candle that we were on. Basically what I was looking for, you can see this last resistance level. You clearly got this daily or this 8-hour candle closing above, and then you had multiple sessions where you retested that level and then you took off. Now, the very fact that we immediately came back into this level and retested it once you finally got your clarity, all right, you even took out this resistance level on this bullish candle, right there. So that's not what you ever want to see if you're bullish an asset. You never, ever want to see a retest and go. Now, anybody that did get long on this bullish candle, make no mistake, they made money on this trade. So basically, if they traded the way that I trade, they scaled out of their position and left a small piece on while moving their stop to break even, and on this push lower, got stopped out probably. All right, so basically, but what I'm trying to say is when you break out above a resistance level and then you test that resistance level as support for multiple attempts and then trade away from it, on your next candle, on your next bearish candle, you want to see a candle something like this, like a small range candle with a retracement wick and then a closure above. That basically constitutes continuation, so to speak. When you get something like this is nasty. This is you immediately went back to retrace and test this level to see if it wants to hold a support, and it did again. So this morning we were on this candle. And what had happened was you had a long wick down that tested the upper end of this bearish candle. It came down, it tested that. So this morning, right at 8 o'clock in the morning, New York session, this thing was trading above this white level. So let's go down into a 5-minute time frame and I will show this to you. All right, so here we are. This is today's price action. Now, this is the area of which I got short. Basically, we came up. You can see this was that wick I was talking about. Came down, tested that 8-hour structure, and then traded away. So anybody that's looking to get long this asset, which I would not have because of that big bearish candle. That big bearish candle, in my opinion, told the whole story about this trade. So I knew that I wanted to be bearish on this asset this morning. Absolutely. I posted it in the CTM scalping room as well as the Trade Talk Discord room, so that way everybody had an opportunity to catch on this trade if they wanted to. So basically, once we traded back down below this was that 8-hour market structure level, that resistance level. You can see it delineated by that 8H over there. We traded back up into it. Now, when we tested this bullish candle right here, this bullish candle, that's when I got long. I mean short, apologies. Boom. And I have my stop just above that bullish candle. All right. So the risk to reward was good. I think I ultimately moved it up. Maybe we'll see. Let me see what does the ultimate position looks like. So here is the, oh, no, it was just right above that bullish candle. And you can clearly see that I got, when we came up to test this bullish candle, I got short. So with the spread, put me down below the bullish candle's opening price, but that's okay. And basically, we started to, this was literally at 745, and then here's 750, this candle here. So basically, price is making it look like it's going to hold this level as support and then take off to the upside. I was not concerned at all, not 1 second in this trade, not at all. As soon as we got this move right here, I knew it was all kosher, especially once we took out that bearish candle. I pretty much was situated and I was good to go. Now let's go back to the 8 hours so I can show you where my very first scale out was on this. Let me just pull that back up. I guess it shows you. So right here was my very first profit taking area. I had put it ahead of the low of day. This was your low of day down here. I always take profits ahead of the low of day or high of day, depending on which way my trade is going. So that way, if it turns around at the high or low or day and then rolls over and comes back in, at least I've still made a profitable trade. And also, this white line is an 8-hour market structure level where it could have acted as support, and that is this white line right here at 137, 1.37828. So this was where my first scale out was. The position still has 1/3 of the initial position size still running, and it is obviously doing great. So basically, moving forward on this trade, if you so choose, you can look for retests of said areas, either this 1.37674 or this level here at 1.37828 in the morning, as long as you're not closing hourly candles above at least this highest level here. You may be situated for a short trade on this asset if you so choose. Now, euro has been the strongest pair, or the strongest currency this week. It's just Wednesday, so this is kind of going to be like a kind of a midweek wrap up, or a midweek examination. This is a weekly level. We'll go to the weekly chart real fast so I can basically show you. All right, so here you go. This is your last bearish closing candle. But basically, I just threw a small position out on this weekly level today, not expecting it to get triggered. And if I did get triggered in the trade and immediately got stopped out because of this massive bullish candle, then you know what? To me, it was worth the risk, as I have already made 2 very extremely profitable trades this week. And if this is the area where the euro is going to roll over, I felt like it was a decent spot to throw on some risk. And I do not have that one, as I did not take a picture of it, so that's okay. But basically, I am short the euro USD from 1.19130. So let's go back into the 8-hour real fast, and I will basically talk you through this as the trade is still working out. I am looking at this to be a swing trade, and this is the reason why. We came up, we tested that level, that weekly level, and immediately reversed. This is an 8-hour area that I was expecting to hold as resistance, but didn't. Well, it did, but I'm assuming a lot of over aggressive traders were probably short from this point, and this wick was just a stop run. So if this thing is going to turn around, because the dollar is in a primo spot to take a bounce, then I want to be in the position from as high as I possibly can be. Like I said, this is a swing trade. This is not a scalp trade, so the amount of risk or the position size is not nearly as big as a scalping position size would be, as the stop loss was a bit wider. All right, so I'm just holding on to this to see what happens. All right, so moving forward, I am looking for this to continue to roll over. Let me take it to the DXY real fast, and then I'll wrap this video up. You know, the near-term trend is up. It is making higher highs and higher lows. I don't care what you want to say about it. Yes, longer term, it is extremely bearish still. All right, here you go. Here's your longer-term trend. Completely still bearish. This was your last support level before this week took it out. All right, so technically, if you want to see what I'm looking at, why I think this thing is going to bounce, so this would have been your last support level right there, right? Let me get this off. So this would have been your last support area because that was your last bearish weekly close before you dropped out of existence. So that level would still react as resistance. It did, and it did. For 3 weeks in a row, this level held as resistance. And then you got your breakout on a weekly basis. Here's another weekly continuation candle to the upside. This is your very first attempt to retest this level to see if it wants to hold as support after the breakout. This is extremely important. If this thing holds on the weekly closing basis, I do expect the DXY to continue higher. All right, at least I will be targeting this 94.038 level if this continues to hold as support. You can clearly see that it is right now. All right, it is right now. So I don't know what the dollar's going to do. If this weekly closes above 92.229, I will be looking for another weekly target at 94.038, in which case, if that were to play out like that, I am uniquely positioned short on the Euro-USD trade, moving forward to capitalize 100% of this price leg up to the upside if it continues. Once again, that's a big fat if. As this thing is in a longer term downtrend, this could just be a small bounce from an old level and it could possibly roll over. But there's still another weekly level right here to watch for support at 91.977. So there is a little bit of confluence, especially on a weekly time frame right here in this zone. So I do expect this zone to hold at least as a little bit of support for the next day or so. So moving forward, very important levels on the DXY to watch right now. If you get your weekly closure back below 91.977, any push up into 92.229 would be looked at with selling opportunities, meaning I would be then switching my bias on the euro from short to long. So hope that helps, guys. If you're new here, welcome. If you're not, welcome back. Make sure you hit the like button, hit the subscribe icon, because this channel is just getting started. And I will catch you guys on the next video. Thank you so much for all my patrons and channel members, as you guys are the bomb, and I love you so much. I will talk to you next time.